Okay, then the next topic is potential cash position. So after we have prepared our forecast budget, cash budget, which we just discussed in the previous session, and we know that January, February, March, April, May, June, July, we are going to have cash surplus, cash deficit, cash surplus. In every month, you will see how much inflows are expected, how much outflows are expected, and how much balance of cash is expected. And as a result, it is possible that you might have your short-term surplus. So you have surplus or you might have a deficit. Okay. Surplus means that your inflows are more, your expected inflows are more. And remember, this is all I'm talking about future. So it's potential, it's possible. So possibly I will have additional cash, I will be in a surplus, or alternatively, possibly I will be short of cash, which means that my cash inflows are less and my cash outflows will be more. So I will be in a short position. So if you have surplus or shortages, these surplus or shortages we divide into two parts. We call it short term and long term. Short term surplus means that you have additional cash, you have extra cash, but this extra cash is for a short period of time. It is not that you will continue to have extra cash all the time. It is for a short period of time, maybe 1 month, 2 months, 3 months, 6 months, 7 months, just for a short period of time. So, what do we do with that? So, if we have short term surplus, we now these are extra funds which are available with us, but these are only for a short period of time. So, we cannot invest them into long term. We cannot invest them into long term. Remember, when you have surplus, you try to get benefit from this surplus. Okay. So how to get benefit? One way of getting benefit of surplus is that I buy non-current asset. But in case of short-term surplus, you cannot buy non-current assets. So short-term surplus can be used in the short term. For example, you pay to your suppliers little early and you get some discount. It is possible, it is common in businesses. You have to pay to someone after 60 days. You say, okay, what if I pay you today? I know I owe you $100,000 in 60 days time, or in 2 months time, or maybe in 30 days time. What if I pay you today? Will you give me some discount? And many companies, they usually give discount. So you can pay to suppliers to obtain discount. Attempt to increase sales by increasing receivables and inventories. You can start giving away more credit to your customers so that sales can increase because you've got extra cash. You buy goods, you buy materials, you produce extra goods, you give it out on credit. Make short-term investments. The short-term investments you make, because remember, whenever you have some extra cash, you want to use extra cash somewhere to get some benefit. So we can make short-term investment. Maybe we can put the money in the bank for some short period of time. You cannot make long-term investment here because you have long-term investment could be, investing in a new business or maybe investing in new assets. You cannot do long-term investment because surplus is there. It means you do have extra cash, but that is only for a short period. So you think in the short period frame, okay? If you have long-term surplus, which means that you are regularly generating more cash. So your business is successful, your business model is good, and every month you are adding your additional cash, and you can see that you will regularly be adding more cash in the next future. So it looks like that you have in a long-term surplus position. In this case, you are going for long-term investment. For example, make long-term investment. You buy some property, investment property, you purchase some property, you make some investment in some long-term investments, you do some expansion, you open up new branches, you open up new, probably you increase your production facility, you purchase more equipment, um, enhance your operations because you have long-term surplus. You can open up new shops, you can open up new branches, whatever you do. Or you may diversify, which means that you start investing in some other businesses and you do diversification. Diversification means that when you have multiple different types of businesses. So these are surplus positions. On the other hand, you might have some shortage as well. So if you have shortage, for example, which we say potential cash position short-term shortfall, So if it is a shortfall, which means that you are short of cash, you are lack of cash, you are in negative cash, but it is only for a temporary short-term period, then things will get better. So I'm short of cash, but it is only for the 3 months or 2 months or 5 months. Later on, I will be getting more cash from my business. But what to do with this period? Because I need some extra cash. I'm shortfall of cash, which means I cannot meet my expenses. I cannot pay my expenses. But this position is not permanent, it is a short term position. So what do I do? Increase account payable. You can talk to your suppliers. It's not that you just stop paying them, you actually have to negotiate with them. You have to talk to them that instead of 30 days credit, I need a 60 days credit for this short period. This is the easiest way to do it. Or you reduce receivable, which means that you start giving shorter credits to your customers, or maybe you start selling on cash. Maybe you are not giving 30 days credit, you say I'm only offering 15 days credit. So increasing payables or reducing receivables, or maybe doing both of them. Or then you can go to a bank and take an overdraft. An overdraft is a short-term financing facility. We call it running finance, we call it credit limit, we call it overdraft, which is a short-term loan from a bank. If you have long-term shortfall, which means that it looks like that for a longer period of time, you will be short of cash. By the way, you might be thinking that if I have long-term shortfall, which means every month my expenses are more, my income is less, my expenses are more, my income is less. So what is this business? I mean, is it a loss-making business or what? And why should it happen that you should have a long-term shortfall? It does happen when you are expanding. It does happen when you are into a new project. Many companies, for example, if I just give you some recent examples, imagine some companies who started making electric, these vehicles, EVs. So all of these EV companies, they were in shortfall because they were making investment in research and development. They were setting up, building their new factories or building new production lines, and sales were, even there were no sales or very little sales. So they are in shortfall. You start making a factory. The completion of the factory will take approximately 2 years time, and in that 2 year time period, you will not have any sales, you will not have any production as well, but you do have some people who are working on that new project. You have an accounting department who is making record of all the expenses which are incurred. So it is not a full-fledged accounting department. At least one or two accountants you will have. You will have project manager, you will have the director, you will have many other people as well who are working on that. And that negative will continue for 2 years maybe. So it is possible. So if you have long-term shortfall, raise long-term finance. Don't go for overdraft facility because overdraft is short term. Go to a bank and take a long term financing, either from a bank loan long term, or maybe you can raise the share capital. So investors usually invest their money when they have long term shortfall. Or if a particular business, it regularly looks like going into negative, then you can shut down some part of the business. Okay, close some operations, or maybe do disinvestment opportunities, which means that you leave the business. So these are some potential cash positions for shortfall and surplus in the short term and long term.